What's up, guys and girls? Today we're going to be talking about Tesla that's down 6% on the day. I closed out one set of my puts, which were up 20,000 on the day, 92% return on the day as well, which is massive, and closed out for a $13,750 profit. I'm still currently holding on to one set of puts, which we're going to explain why I closed one and why I ended up holding one. We're also going to go into great detail about why we were short, why I believe we could still see this move down to $180 and at least probably down to 200 bucks. Now, more importantly, if you guys want to follow along with these trades, go follow me on Twitter and be a part of our Discord community. They're both completely free, 12,000 members in the Discord and all of the courses, and I put all of my trades out here basically for free. If you do want all of them, you can actually sign up for our alert service to get access to much more. But I throw a lot of my trades out for free for you guys because I know what it's like when I first started trading to hear a reasonable, sensible voice in this market and to have somebody there to kind of guide you guys along the way. So let's go through first. Let's just talk about this Tesla setup that we are looking at. We're going to go first with the technicals. Then we're going to talk a little bit about some fundamentals that are currently happening, specifically with the bond market. And then from there, we're going to look at unusual options activity from yesterday going into today. Because all of these things build a picture, all of these things are pieces of evidence, and all of these things are that we want to put together to create a thesis and then risk our capital accordingly. We're going to start by looking at a 4-hour chart of Tesla. And the first thing that I need you to understand is that we're running 3 SMAs. The first one is an 11 SMA, which is this quicker moving one. Then we have the red one, which is our 50, and the 200, which is our gold. If you can see here that we are in still a downtrend. If we look here, moving back over the past 180 days, you could consider that we're in this uptrend still, but we are still in a downtrend. We're trending under all of these simple moving averages. If you're somebody who doesn't understand how to dictate trend, I recommend you just throwing up some simple moving averages, at least a 200. And then if we're trading significantly under the 200 or the 200 is trending down, which is what's starting to happen now, you can safely say usually that we're going to be in a downtrend. And so if we look at this, we are obviously fell from earnings, pulled back down. We're using this 11 SMA as a potential resistance point. So now my time to go short and where I first opened my short position was right around here on this breakout up of about 212. My thought process here was that our risk versus reward, so going short here at about 213, down to 184 was about a 14% move to the downside, which is very, very good. And then from here, to our stop loss would basically be a 4.5 to maybe 5.5% stop. So that means starting out with this position, we have a 2-to-1 risk versus reward ratio. But the way that I usually build out positions, specifically these bigger time frame ones and these bigger positions from a monetary standpoint, is usually by layer buying. And so once I start to see that a stock is trading in our trend direction, it has retraced back up to a level that I feel is really good from a solid risk versus reward standpoint. Usually what I'll do is I'll place an order early. And this is where I started entering at 212.50 last week. And a lot of people are like, dude, it's too early. And I'm telling everybody, like, I understand I'm building a position because number one, I understand that the chances of us coming right up to the perfect entry every single time is just not going to happen over and over and over and happen consistently. You might get a couple of good setups like this one once or twice a year, but overall, I've noticed that you just kind of have to be a little sloppy with your trading, tight with your risk management, but a little sloppy with your entries, because at the end of the day, we're trying to trade with this trend. So my thought was if we rejected at 212.50 and I had maybe a third of the position size that I had, this move down here would have been about $20,000 in profit, which would have been huge. Instead, we went through, I saw this thing move up, and I averaged down one more time up at 220 bucks. I need you to understand this. I'm not averaging down just to pray and hope that the gods help me. Because the truth is, if I had no plan here and I was just shorting the downtrend and every tick up, I started averaging down, even if Tesla cratered and moved down to $183, I wasn't right. What I did was not correct. Just because you make money does not mean that what you're doing is correct or going to help you in the long term, right? A lot of people think that as somebody who's a professional trader and I guess like a fucking influencer or whatever, I hate that word, but as somebody like myself, they think that at the end of the day, we are always focusing on being right and that we're constantly focusing on getting the best possible return. One of the worst things that can happen is you can be fooled by randomness. You could average down heavy at a specific level, stock could retrace or even move down to a lower low, and you could think that you're a much better trader than you are overall. So I understand that I'm never going to get the perfect entries. My first entry was pre-planned at $212.50. My second one was pre-planned at $220. From here, I'm not going to average down more, but what I'm waiting for is a close above my target stop loss. And this is so important because what we're looking for is confirmed closes over specific levels. If I was playing this instead of a confirmed close, I was just playing, for instance, as soon as it hits 220 or as soon as it hits 222, I would have got tagged out of this trade. And so if you're somebody who gets tagged out of trades a lot, this is something that could end up helping you. We see this change of control, or this change of character right here at 202. So we push through this level and we start to drain. Now, I know that the chances of us just draining straight down to 185 is very, very low. There's a good sign that we're going to at least retrace back to the 11 or at least back up to this order block. This order block, this resistance level here, is very important. While I'm watching the sell-off that's occurring at this moment, I know that my short entry is not here. My short entry is waiting for this block to come into play. So I was very patient. Boom, next day gapped up. This is where I started to go short. I'd say 212, 50, 213. As we move up into this resistance level, this looks terrible. But something happened here, which is a good sign. We pushed all the way up over the level I was looking for, but we closed underneath. So this is where I would hit my second position in. From here, we watch again. Not the best. We're not selling off, but we are not holding over 222. And then we get this drop down here on November 6th. Still looking a little bit better, but now we're pushing back up. This is not good. And look at what happens here. We come so close, so close. But I understand at this point that at 220 to 222, there's going to be a lot of manipulation. There's going to be a lot of potential breakouts, a lot of false breakdowns, and a lot of people sitting there with their finger on the trigger waiting to either enter the position from 220 to 240 or potentially exit their shorts. So I held steady. Once again, we get 3 candles that are tapping that level before finally we get this drop. Now, I took my first profit set here. This is where I closed out those earlier. I have another set of puts. In this instance, we're just doing shares, we're shorting shares, but I still have another set of puts. And what I was looking for on that first one was the gap fill back down to 205. Something that could be setting up here, and this is something that we've been talking about for a while, I'm just going to flatten this out, is an inverted head and shoulders. Now, I talk a lot on this channel about potential setups, which I'm going to be honest, like I probably shouldn't do because you shouldn't be playing an inverted head and shoulders before the shoulder actually forms. But looking here, that level, the change of character that we were watching back here at 202, that is now, in my opinion, probably going to safely be the low. So I asked on Twitter, what do you guys think the low is going to be? A lot of people are saying 204, a lot of people saying 202. I think realistically we'll see this continued sell-off down to 202. My first position at 202, I'll probably be up $2,000, $3,000. If we continue to break through 202, the next level is 180. I don't necessarily think that this is going to happen, but you have to understand, we're trending down. This pop is getting shorted from what it seems. We're moving our way back down. And I'd say at this point, there's probably a 65% chance that Tesla's going to continue its way back down to 182. But the more important level to be watching is going to be $202 to $200. If that level is broken, if the inverted head and shoulders does not happen, then we will move down to my price target down at 180. And you can see my targets down here, which from this level is a 15% move to the downside. So if you could have been patient, and this is not going to always happen, but if you could have gotten in when I called this out on Twitter, I actually can even show you guys the exact breakdown in which, I think I did a video yesterday, but the exact breakdown in which we were showing this trade. Because watching for these high probability setups, like I have shorts on SPY, shorts on QQQ, I'm not gonna be able to find it right now. But basically what we're looking for is a high RVR. So if we're setting the short here at 220, we're setting a stop loss up around 225, 226, and our take profit down here, you're looking at a 5-to-1 risk versus reward. You know, like even shorting $10,000 worth of shares, you're risking $300 to make $1,885. These are the types of trades that we look for. Now, if I was somebody who entered a ton of puts in the past couple of days, and this is a question a lot of people have probably asked, like, well, what if I actually got in at that price? what I'd be looking to do is kind of what I said earlier. Start to scale out, sell half down at 205, sell the other half down at 180. And then if we do bounce at 200 and you don't close it out, even if you ride this back up to 225, your entire position, because you've been scaling out, taking profits and then taking a small loss, you'll be sitting somewhere around even.